Welcome to Tesla Daily News Podcast. It's Thursday, April 2nd, 2026. Today, we're breaking down the biggest Tesla stories with real stock impact, the setup for first quarter deliveries, a notable rebound in Europe, fresh scrutiny around robotaxi autonomy, and the geopolitical risk that briefly put Tesla on a list of corporate targets. Story 1. Tesla deliveries are about to hit, and the market is bracing for a sequential dip. The hook here is simple. Thursday morning's delivery print could reset expectations for Tesla's near-term growth story. Context: deliveries remain the cleanest, highest frequency signal investors get on demand and factory utilization, which then drives sentiment on revenue and automotive gross margin. Details: ahead of the release, analysts polled by Visible Alpha are looking for roughly 368,900 deliveries for the January through March quarter. That would be down about 11.8% versus the December quarter, but up about 9.6% year over year. Another compiled consensus cited in the coverage sits around 365,645 vehicles. Impact: if Tesla lands materially below that mid-360,000 range, you should expect near-term pressure on earnings estimates and renewed debate about price cuts, mix, and whether competition is biting harder than expected. If Tesla beats, the stock reaction can be outsized because positioning has been cautious, and the market is currently hypersensitive to growth signals across mega-cap tech. Takeaway: for investors, watch not just the headline number, but whether Model 3 and Model Y volume appears to be stabilizing, and whether any commentary in the market points to improving order momentum going into April. Story 2. Europe shows a March snapback, France and the Nordics surge. The hook: the same region that was a pain point in 2025 just produced some eye-catching March registration numbers. Context: European registrations are a good proxy for demand, and Tesla's brand perception and competition from Chinese and legacy automakers have been key investor concerns. Details: in France, Tesla registered 9,569 vehicles in March, about triple last year, up roughly 203%, and essentially matching a prior record near 9,572 back in December of 2023. In Denmark, registrations were reported at 1,447, up about 144%. Reuters-based reporting also cited sharp gains across Norway, Sweden, and Denmark, with increases ranging from roughly 96% up to 178%, depending on the country. Impact: strong European prints help the bull case that Tesla's refreshed and cheaper variants of Model Y and Model 3 are unlocking demand, and they can reduce downside risk to second quarter revenue if the trend holds. But investors should keep one foot on the brake. March can be promotion-driven, and Europe remains a battleground with intense pricing pressure. Takeaway: treat March as an encouraging data point, not a full trend reversal. The key is whether April and May sustain the momentum after incentives normalize. Story 3. Tesla admits remote humans can take control of robotaxis, and that could pull regulators into the story. The hook: Tesla's robotaxi narrative is a core pillar of its valuation, and anything that redefines autonomy matters. Context: markets often price Tesla as more than an automaker, with future earnings power tied to robotaxi, full self-driving subscriptions, and eventually robotics. Details: in responses disclosed through Senator Ed Markey's inquiry, Tesla said remote assistance operators can help when a rider or the autonomous system requests it, and in rare cases they are authorized to temporarily assume direct vehicle control as a last resort escalation. Tesla said these remote operators are in-house staff working from centers in Austin and Palo Alto. Separate coverage notes the control can occur at very low speeds, typically below about 2 miles per hour, and in some cases up to about 10 miles per hour or roughly 16 kilometers per hour. Impact: two-sided. On the positive side, it's a safety redundancy that can get a vehicle out of a stuck or unsafe position quickly. On the negative side, it invites questions about how driverless the service truly is, and it may increase the odds of tighter federal standards or investigations into remote operations. That regulatory overhang can slow rollout timelines, and timelines are everything when robotaxi revenue is central to long-duration valuation. Takeaway: investors should focus on transparency. How often is remote intervention needed, and does it scale economically? A robotaxi business can still be valuable with remote support, but the margins and regulatory pathway depend on how frequent and how invasive that support is. Story 4. Geopolitical risk. Iran's Revolutionary Guard names Tesla among targets, while markets trade de-escalation. The hook: Tesla got pulled into a geopolitical headline that can influence risk sentiment and headline volatility. Context: in a market already driven by oil spikes, shipping disruptions, and rate expectations, anything that threatens corporate assets in the Gulf region can change the risk premium. Details. Multiple reports said Iran's Islamic Revolutionary Guard Corps listed 18 American firms, including Tesla, as potential targets in the region starting the evening of April 1st Tehran time, while advising employees to leave workplaces. In parallel, market coverage highlighted a relief rally based on hopes the Iran conflict could end in 2 to 3 weeks, with oil temporarily dipping and index futures rising. Tesla shares were cited up around 2% in pre-market trading amid the broader de-escalation bid. Impact. The direct operational impact on Tesla is unclear. Tesla doesn't have the same physical footprint in Gulf office locations as some other tech giants, but the stock trades in the same risk basket as mega-cap tech. If oil stays high, that can pressure consumers and overall equity multiples, even as it can also improve the relative appeal of EVs versus gasoline vehicles. If the conflict cools, Tesla benefits from a general risk-on environment and easing inflation fears. Takeaway. For Tesla traders, geopolitical headlines matter less for Tesla-specific fundamentals and more for market-wide beta, oil, and rate expectations. Keep an eye on crude, bond yields, and any escalation around corporate infrastructure. Story 5. Tesla expands its retail and delivery footprint in Ireland, a small market, but a useful signal. The hook. Tesla is still building distribution capacity where it sees demand, and that can help reduce delivery friction. Context. Delivery capacity and customer experience matter when the company leans on volume and efficient logistics. Details. Tesla secured planning permission for a new sales outlet and delivery center in North Dublin, with industry sources estimating the investment near €5 million. The filing notes the existing Sandyford site is reaching capacity. The project is expected to create 26 permanent jobs. Separately, Ireland saw Tesla registrations of 2,769 last year, down 5.4%, but March sales were reported at 571, higher than the prior 2 months combined, following price cuts. Impact. This won't move global financials on its own, but it does support the narrative that Tesla is addressing bottlenecks and leaning into markets where price adjustments are improving unit velocity. Takeaway. Think of this as incremental execution, small capex relative to Tesla's scale, aimed at supporting deliveries and service levels. Now let's tie the themes together. The big picture for Tesla today is a tug-of-war between near-term unit growth questions and the long-term autonomy premium. Deliveries tomorrow morning can shift the narrative quickly. Europe's March rebound is a promising counterpoint to demand worries. Robotaxi remote control admissions raise legitimate regulatory and transparency questions that investors can't ignore. And geopolitical volatility continues to drive the macro tape, oil, and tech multiples. That's it for today's Tesla Daily News podcast. If you want to stay ahead of the delivery report reaction and the next robotaxi regulatory headline, make sure you're subscribed and follow us for daily updates. Tomorrow, we'll be watching the delivery number, the market's first read-through to margins, and any follow-up from regulators on remote vehicle operations.